Yo, yo, yo. Welcome back to the channel. We're going to do a market update. As always, we do this daily. We'll start here from a very macro perspective on SPX, just to give you an idea of perhaps another reason why. Because I know, so I did see like a lot of people saying like, oh, you were calling for this bounce to 415. Which was a relief rally that I was looking for on SPY. And now, we're coming down to these lows, and now you're saying, we're going to see lower lows. But obviously this person, but I just want to contextualize my view, because this person obviously isn't watching the videos every day to see how I'm coming to these conclusions. But there are certain behaviors that happen within the market that will, even at lows, because I am the type of person that wants to buy aggressive dips and wants to play, to the long side when people are very bearish, and I've done that throughout this process, right? The process of this kind of downtrend that we've been in all year. I have taken the contrarian stance many times, and timed long positions very well, as well as still being able to take advantage of the net short across the the broader market. So, and you guys have seen that through my technical analysis on the channel. I don't have to. I mean, I don't feel the need to prove anything to anybody. But the analysis is the analysis. We've analyzed, and for the most part, we've been able to know what was going to happen in the market. So let me break this down for you. So basically, what you're looking at here is the all-time SPX chart. You have the macro, basically resistance within this bull trend, bull channel really, and then you have the macro support, right? And then what you have here are some minor supports that are, and you are developing a pretty macro rising wedge here that starts in 2008 to 2009. And as it's angled here, the next bottom was the COVID bottom. The angle here has you potentially going into 2034 until you reach the apex of this rising wedge, if you will. And so what I'm trying to illustrate here is that now, through the course of this, and you have 3 days left on this 3-month candle. This is actually pretty interesting because this does look like a hammer that you're developing here, which would be a bullish reversal signal. Can we do volume? Why don't I have volume on this? That's weird. And you do have decreasing volume going down here. But look, what I'm basically trying to point out here is that the likelihood overall within the broader market, like over the course of the next 10 or 15 years, the likelihood is that at some point you will have regression back down to these lower trend lines that we have here. First, the teal, next, the thin red, and then ultimately, eventually, and it could be until you play out this rising wedge, perhaps, and then maybe there's another wedge that forms. And I know that number that I just flashed up there is crazy, but realize that's in 2080, right? This is how the U.S. economy operates, guys. It operates in an assortment of rising wedges in a way, and I know we're going on a bit of a tangent, but this is actually pretty interesting, so at least it's interesting for me. If it's not interesting for you, that's fine too. By the way, if you're enjoying the video so far, it's important that you like the video to let YouTube know that I'm doing a good job. But you can see that you had this sort of rising wedge that developed here for the .com bubble. You broke down out of it, and then you had what looks like basically a retest, right? You came back and you sort of were looking for a retest. You never got the true, well, let's see, maybe you did. Depending on how we angle this trend line, I suppose. No, I don't really see a way that I could. Oh yeah, here it is. Yeah, so you had this kind of retest. I mean, you were getting rejected down by this uptrend here, and then that was ultimately like the retest of that rising wedge. which caused the '08 failure, right? From a technical perspective. It's funny how it works out, right? Because the story is that it's this fundamental problem with the housing market, but what you have these long-term trends and this general weakness where SPX was unable to reclaim that trend or have more aggressive highs, and I'm sure that we could draw a rising wedge here as well, and you had a technical breakdown. So anyway, getting to the point here, what I'm saying is these trend lines at some point in the future will behave as magnets, right? As you get closer to them, you are going to have a general want or need to go back and revisit them. And I'm not saying that it necessarily happens tomorrow, but what I am saying is you are generally, if you look at the bigger picture here, let me make this a little less visible. I want to leave it here, but make it less visible. At the end of the day here, you are trading relatively high and probably still above the long-term midline. Let me take the magnet off right quick. Let's see if we were to draw a midline. Probably be right around here. Right? You still have a significant amount of space where you have not visited in a very long time for a true bear market on this chart. I mean, you haven't had that since 2008. You haven't been below this. And really, you've been overextended in relatively, right? The only other times that you've been above this since 1920 were the Great Depression. Well, the Roaring 20s, I'm sorry. The Roaring 20s is when you were remaining above it. That growth was unsustainable. You got rejected down below this midline here, created this midline, and you literally spent 60 years, 60 plus years, 60 plus years below this midline. And then you rocketed back above it. You revisited Great Depression relative territory. You got rejected by the dot-com bubble, right? You got rejected even further down by the '08 depression, right? The housing market crash. And then since then, you just sprung back up, and you're back up in this relative overbought territory for the history of this chart. That's the reality, right? That is the reality of where you stand on this chart. And does that mean that tomorrow that you crash? No, it doesn't mean that. I mean, you could still make the case here that there's significant reasoning to suggest that you could have another bull run, right, into October 2023 and revisit this. Why not? Create somewhat of a head and shoulders type look. That's my favorite pattern, by the way. Before you have a longer, more drawn out recession, right? Totally possible, totally within the realm of possibility. But generally speaking, within the market, as you approach this red line here, and this was, look, I mean, towards the end of last year, I remember talking to Merck Trades. I don't know if you guys are familiar with him, but JP, and he was really bullish, like in November, December, and I mean, obviously there was a lot of fundamental reasons to be bearish on the market, but we don't really consider those nearly as much as we consider the technical reasoning. And the technical reasoning here signaled that, coming up in December, if you were to come up and test this 490-ish region, and me and Rico talked about this pretty in depth, it was likely, this 490 to 520-ish kind of range was for SPY was very overextended and very overbought, and that you were likely to see the price turn around, right? Because of this trend line, solely because of this trend line. And so you've seen that relative truth hold up, right? Just because you're just relatively overbought. That's just the truth of the matter. Now, let's get down to the nitty gritty. We're going to rechart this whole thing with these big macro lines in consideration while we do it, okay? So, obviously, this broadening wedge that we've been watching since the beginning of time, it feels like now, is here, right? You have this, and this is a bullish pattern in nature, but you can see that there can be some pretty nasty, extension downward before you see recovery. And then we did have this relative midline within this localized trading range, which you just recently broke down out of, which is bearish, right? And now you're actually getting pretty good extension down out of here, right? So just to elaborate further on the reasoning behind, let's see if this tool is working today, because it wasn't working yesterday when I was with Trey on his co-stream. We were doing a fixed range volume profile, and we did it from here, the top before the COVID crash, to here, okay? And this volume profile suggests heavily, why is it not showing the bottom of the range? What the heck? I mean, this tool, it wasn't working yesterday, and now it's not working again. It's so weird. I guess I'll just do it manually like I did last time. Just give me a moment here. Make those lines nice and thin. We will go here. There's no price data down here on the SPX chart? Okay. That's really weird. Well, then why is there no... Okay. The volume data is broken on SPX before this time. Okay. So I guess I can just illustrate that here through SPY. Yeah, I have it drawn here anyway. That's fine. Let me remove a little bit of noise from here. Just get the important stuff up. That can stay. Let me see if I can recreate this uptrend. I think that was the 08 uptrend, right? Yep. Okay. I can recreate that on this chart. And then the resistance trend is a little bit harder because, oh, this is actually it right here. Okay. Is it? Yeah, it is. What the fuck? Have you already broken down out of this? No, this isn't it. Okay. Yeah, this is it. Okay, cool. Got it. Sorry. Let me make it teal so that it correlates with that other chart. You can remember a little bit better. Maybe we remove the background on this because it's kind of weird. Histogram box? Yeah, okay. Boop. All right. Sorry about that. Super weird. Yeah, so basically what I'm saying is here, let me draw this out. Is this how I had it drawn? You guys are like, bro, really, like, seriously, just, like, can you just prepare for your videos so that I don't have to sit here and watch you? But maybe this is useful to watch me manually chart this. Could be. So before you get to this this historical uptrend that is based on 08, and again, I'm not saying necessarily that you have to go down and test this right this moment, right? But we do see some confluence when it comes to confluence. Is that the correct word? We do see some reasoning here that between this kind of volume pocket being left behind here, the volume being relatively high up here and relatively low below, which is bearish, in this trading range, right? I've talked about this before, but if it looks like a P in this way, that's generally bearish, right? And it's going to call for volume to get filled out towards the bottom here. This pocket up here, though, is definitely something to make note of. Price could get drawn up here at some point, okay? Let me make that straight lines. Yeah, whatever. This is like a macro, just general charting exercise that we're doing here. I actually kind of like this. Hopefully you're enjoying. You might not be, but that's fine. I don't really care. So so price will be generally drawn to this air pocket as well. And then let's draw a rectangle. So let's draw a rectangle there. Okay. So price will be drawn to this region, which is your 236 Fibonacci as well. Oh no, I can't click this fucker. Come on, bro. Ray. Everybody loves Raymond, am I right? Yeah, and then like here, this is a big liquidity zone here. A lot of empty liquidity here going down to this volume shelf down at your 0.5 Fibonacci, ironically. And I was telling Trey that I do expect eventually that you come down and you test the 618. So how do we get there, right? I said in my video yesterday that I was expecting that you would eventually come back and retest this midline. And I think that there was also a shorter term uptrend that was possible to be revisited. Let's see. This looks a little unrealistic. What would it have been? It might have been you know what? It was probably that original line that I had drawn before. Don't worry about that right now. Most significant is I do think that you come back and retest this midline. When you retest this midline, okay, let me simplify it. Let me zoom in a little bit more here, okay? What has to happen from here is either, and I'm gonna remove this big red box for now. What has to happen here is basically as you're making a test of these lower lows here, right? You've already made your first test. I was not expecting the first test to fail here, right? You're gonna find support. Bulls will come in and defend this initially, okay, at least. What I'm saying is on this, whatever retest is about to happen, right, and it could happen over the course of the next few weeks, whatever, you're going to come back up and you're going to retest this midline. You're going to retest this liquidity here, here from this gap. You're going to retest this, okay? And probably a good zone to be looking for is here on November, the beginning of November here, to have the ultimate test for this market, okay? So you could kind of get a little range bound here and then retest, and then you're going to get pushed down again, and you're going to make new lows. When you make new lows here, it is critical that the volume is relatively low on this move, and then volume steps in if you want to be bullish for this move back up, okay? Let me put that green line, make that green. That is going to be key, okay? If that happens, it is possible that you make the claim that you had a double bottom / triple bottom, and then what the results of this all becomes an accumulation, right? Where you had your original sell climax back here, and we were talking about this on Trey's stream last night. Your original sell climax back here with an automatic reaction, a sell test, a secondary test in phase B, and then this would be a phase B distribution, which would be then followed by this being like a spring after another sell test back here in phase B of this accumulation. That's how you could see this be played out as an accumulation, and then the eventual move here would be another test of this general bear trend that you've been in, okay? So that's the bullish scenario. I do think that it's actually the least likely scenario at this stage, and I think that after this test, if bears step in with major volume, then this becomes a redistribution, and you actually get sent down pretty violently here, okay? And I think regardless, let me make that red as a bearish scenario. The correlation of these volume pockets that I was discussing before, as well as the general overextension of the market. And again, I'm not saying that you can't continue to get overextended and then go up and even retest that that trend that we had on the SPX chart way back here, right? You never really tested it. In the way that I have it drawn here, you never actually tested that trend line. So you could have this crazy rally come up, and all of a sudden SPX goes to 5,600 or so, something like that. And then after that, that would be like, like if you actually touch that trend, that long term resistance trend, that would be like the short opportunity of a lifetime. Because you're gonna get crushed after that, and I mean, you might not break down out of this rising wedge that we have here, but you're gonna go back and test it after that. What would that look like? It would be something like, it would be something like here, maybe even 6,000. I mean, that is crazy. By 2025, another bull rally. Test here, right? You'd be all the way back down to 4,500. And that would be, another 25% kind of recession. Basically what we're in now. And that would behave as a UTAD within a distribution. Hopefully this is all making sense. And I'm kind of talking a little bit in circles. I thought I had a plan. I really did, but I just really like charting, so I kind of nerd out when it comes to this. That's really weird how the volume doesn't cover. I think it's more likely that maybe even you have like a bull trap occur here. You would test like this downtrend here or something, and then you get sent back down again. I think it's most likely that you come down and you test that. Wait, where is this trend line from? What the is that the macro one? Thick red? Yeah, that's TradingView fucking up. You guys see that, right? You see what just happened there? Why is it way up here now? Motherfuckers, dude. Oh, fuck. All right. Let's see. Is there anything else that we can do that's valuable here? I think that the bearish scenario is the most likely. I think that the retest coming up here is very, very, excuse my language, likely to happen. Like, you're gonna come up to like 375. Maybe you can have this kind of long, drawn out, range bound thing. Maybe even pop back up. You test it again before you have this ultimate test of this midline that we've had drawn from back here. And then from there, a break with volume, very bullish. Rejection with volume, very bearish, and you're gonna have another attempt at new lows. I think that's gonna happen regardless. When you have those new lows, this kind of apex point that's gonna come here, you're gonna make new lows down to. I can draw like a local fib to give you an idea. I mean, you could go as low as like 348 on this move and still get supported for that bullish move. But when that happens, on the bull side, if you go down and test 350, you have to see price. You have to see no volume on that move. Like, the volume has to be very low compared to this local range back here, okay? Compared to this general bear trend, if it gets pushed down, you want to see volume very low. If that happens, it's extremely bullish, and the likelihood is that you're going to have a very hard press back up to the macro downtrend, okay? Hopefully this made sense. I know this video is getting a little overextended. Oh, it's only 23 minutes. That's not too bad. Hopefully you had fun looking at this from a more macro perspective with me. And I did want to share the potential of this being an accumulation, because I have been looking at this move, generally speaking, as an accumulation. And it does look good as an accumulation. But I do think that the likelihood with bear stepping in, supply becoming more available, and demand not really coming in yet, it does make it seem more likely that you would go back down and retest this bottom green trend of this broadening wedge before you could have a recovery. And what that would look like is you would get pressed down into this teal trend here, which would send SPY around $300. So that would be a pretty substantial drop of about 38% from the market top in January or December, whatever, whenever the top was. Let's see. Yeah, January 5th. Yeah, so that's basically the entire market outlook. It looks really crazy now looking back at this chart. A little confusing, but hopefully you were able to keep up and see what I was trying to illustrate here. Hopefully it was easy to keep up with. But yeah, overall, this market structure to me, if we take away just one more quick little tidbit here, if we take all this away, to me, this looks like a distribution that wants to play back out to at least this like 340-ish peak. That's going to be a big test, this 340-ish level, which was the peak before the COVID crash. And I think that we will eventually come here no matter what. SPY will revisit $340 at some stage. Even if it goes up to $500, $600, it will come back to $340. It's just a matter of time to retest that liquidity. But I think that's going to be your big test. And then from there, you could have like your really big spring action down to 300. Everybody's panicking, talking about how the fucking world's about to end or whatever. Excuse my French again. But you catch support on this uptrend back here. And then that would be, to me, the ultimate long opportunity. Where suddenly the news would somehow get better. You know, the government stepping in with funding type thing would happen to keep the, you know, Jay Powell, you know, opens up his checkbook again. And things can go back to, you know, bulls on parade again. That's the most likely scenario. And I think that overall the U.S. economy probably over the course of probably the foreseeable future is just rising wedge after rising wedge within this bull channel, just like it pretty much has been for a long time. So anyway, hopefully you enjoyed the video. If you did, make sure you smash a like, drop a comment down below. Let me know what your thoughts are on this macro view of the S&P 500 combined with a more local view for the future of this market. Hopefully you enjoyed. Do we want to sing a song? I mean, you're still here. It's 26 minutes, 27 minutes in. I really appreciate you, by the way. Thank you so much for hanging out. Let me make my head big. You guys seem to like that from the video yesterday. And hold on, I need to zoom in a little bit closer. It's not close enough yet. Hold on. Let me zoom in a little bit closer. It's kind of, all right. Oh, you can see I have like acne, a little bit of acne. What's on my Spotify right now? Oh, United in Grief. Wow. I grieve different. The new Mercedes was black, G-Wagon away from. It was all from rap. I was 28 years young, 20 million tax. Bought a couple of mansions just for practice. 500 in jewelry. Chain was magic. Never had it in public. Late reaction. 50K the cousins. Post a caption. Pray none of my enemies hold me captive. I hope you find some peace of mind in this lifetime. Tell them the truth. I hope you find some paradise. Tell them.